About two-thirds of companies in the S&P 500 have reported results so far. 77% have beaten the profit estimates. But Chad, I know that you're somewhat concerned about revenue and profit growth, seeing that it may fall short this year. What's that going to do to overall valuations?
Well, overall valuations right now, we're looking at a forward-looking PE multiple of about 17 times. So we would be somewhat more cautious on the equity markets at this inflection point.
Really?
Now, when we look at top-line growth, we really believe that perhaps you'll get 2% to 1% revenue growth for the S&P 500.
So what is this being affected by? I mean, why do you think that some of these companies are going to come up short?
Well, a couple of things. Three things. One, global growth is decelerating. Two, you have strength of the U.S. dollar. And three, you have oil that's plunged, and that's a major contribution to the shortfall.
So I'm going to fire back at you and say, okay, oil's moving lower. That's actually kind of good news for U.S. consumers. Consumers are 70% of the economy. And you know, even though the dollar's moving lower, foreign investment still wants to be here. I mean, we are effectively the only game in town when you look around the world right now.
Okay, so let's go through it being good for the consumer. It's moving discretionary spending a bit. But I will ask another question. Is it going to have a multiplier effect? Will it affect the general population to go out and buy a home where they'll take on more debt and actually the money supply will actually
theoretically
grow?
I mean, if you're out buying curtains and you're buying new furniture and all that kind of stuff.
A lot. I don't believe it will have that gin up for GDP in 2015. So our expectation for GDP is roughly about 2.6 to 2.7%.
Which and now when you consistent with this anemic growth that we've seen over the last several years.
And then when you look at business investment, we believe it's about 16% of total GDP. Typically, we think that that would move higher to 17% over the next 18 months. But the oil and gas investment spending cycle that has been so ebullient over the course of the last 5 to 6 years, well, that's diminished. That's
I mean, you saw Halliburton today scaling back, cutting jobs, and citing oil as one of the reasons.